Hey everyone, happy December 28th. It's Thursday. It's about 10:15 on the West Coast and time for another market update. Time for the last market update of the year. Crazy to think. I thought about doing a 2023 year in review, but most of us in the industry would like to forget 2023. But I will do probably a 2024 what to expect video coming up here shortly. But where we left off last week, we were hoping for a really good inflation number on Friday, a nice early holiday present, and we got it. The PC inflation for November came out lower than estimates. And in fact, the headline number was the first time it turned negative, negative 0.1% since April 2020. So not just inflation slowing down, but de-inflation. So good to see on that end because we definitely want inflation to keep coming down. So as you can see, it came in year over year, dropped from 3% to 2.6%. The core dropped from 3.5 to 3.2%. Remember, the Fed wants their goal for this PCE core is 2%. So the 6-month annualized rate for this core is 1.85%. So already below that number, which is great to see. Shelter still, showing it elevated numbers. We know real time this is a lot lower than these reports are showing. So that's, good to know, like we've talked about, that we're going to continue to get gains out of shelter coming down. So overall, really good inflation numbers. Market didn't react too crazy, but just really good for the long run. We know this is going to back up the Fed's, their way of thinking that hopefully we get some rate cuts here in the early part of 2024. Next thing we got both a November new and pending home sales. So new construction, those are down 12.2%, up 1.4% year over year. The reported month supply is about 9.2 months supply of homes, but keep in mind there was only about 78,000 completed, so only about 1.6 available month supply. So if you wanted to move into a home now, there's only about 1.6 months out there. If you wanted to buy, and sometime move in next year, that's, we're going to get that 9.2 month supply. So that counts everything in the process. And keep in mind with this and in the pending, people that, sign contracts in November were probably shopping in October, September, maybe very beginning of November, but, rates peaked in the beginning or middle of October. I think October 15th is when they jumped above 8. So, higher rates definitely would have affected these numbers for the November stuff. So same thing in pending. Pending was down or actually flat month over month. It was expected to gain a little bit. Year over year, it's down negative 5.2%. There's definitely been, as it shows here, Dr. Lawrence Yoon from NAR, definitely been a spark and interest with rates coming down that's led to more activity. So it'll be interesting to see the December numbers to see how those come out. So those would have been people, shopping in November when, rates have actually, gotten better. And then in January, obviously, with these December gains, we'll see those as well. So, just keep in mind that these numbers were lower than expected, but also, with the way things have gone in the rates and when these people would have been shopping, that definitely makes sense. Next thing we got appreciation numbers. So October FHFA and Case-Shiller. So keep in mind, FHFA does not count jumbo and cash deals. Case-Shillers can kind of consider the gold standard. And Case-Shiller came in at 0.6% gains in October, FHFA 0.3%. Year-over-year pace for Case-Shillers at 4.8% now, and FHFA is at 6.3%. And all four of these metrics are on 2023 pace about 7%. So good for current homeowners. Good to see, these home prices continue to gain. Again, this is just through October, and we'll see November, December numbers coming over the next couple months. It'll be interesting to see, where rates spiked, and seasonally these tend to slow down. So we might see these give back some of these gains over the next couple months, but still really good place compared to where a lot of people thought we would be in 2023. Next thing we got was initial job claims. Came in at 218,000 new claims. 210,000 was expected, so a little bit of a beat on that number. Continuing claims, about 1.875 million, I believe, about what was expected. So, again, it continues where employers are trying to hold on to employees, but when people do lose their jobs, they're having a hard time finding new jobs, hence, the continuing claims going on quite a bit. Next thing, miscellaneous, we got the Pulsenomics Fannie Mae Home Price Expectation Survey. So a few times a year, they take a look, they speak to about 100 housing market experts and basically ask them what they think is going to happen over the next year with home prices. So I believe the average was about, for 2024, between all the different experts was about 2.5% gains. The average 5-year gains there, between everybody is 25% gains in home equity. The most pessimistic people, over 5 years, about 10%, the most optimistic 40%. So quite a bit of a gap there, but really, even, we get these low numbers still, 10% in 5 years, $500,000 home, that's $50,000 worth of equity. Whereas, 25, it's another $125,000 worth of equity. So, everybody kind of expects, even the most pessimistic, that even if prices dip a little bit over 5 years, we're going to continue to see home price gain. So again, something good for homeowners, something for people on the prospective home buyers to keep in mind, that equity keeps going up, home prices keep going up. So the later you buy in this process, the less equity you gain. The next thing we got was the average 30-year conventional. So the average 30-year conventional is down slightly. Last week we were at 6.64. We're at 6.63. Again, it's nice to see some kind of not very volatile the last couple of weeks. Some nice gains off the inflation numbers. Again, it's we're in the holidays right now, so things are going to be a little slower. But overall, we've kept the gains we've had, and we're set up nicely going into 2024. When maybe the Fed does those price cuts. Or I'm sorry, those rate cuts. So important dates coming up. We got the BLS job report on January 5th. So that's next Friday. That'll be a big one. Those have been very, very important. So I'll cover that when I do my video next week. And after that, we get inflation, CPI on the 11th, PCE again on the 26th, and then we get the Fed coming in on the 29th. One last thing I wanted to share with you guys, actually, with mortgage rates. So here's a little bit of a year in review. So last year on this date, on December 28th, the 30-year fixed average conventional was at 6.54. As I said, we're at 6.63 today. So really flat since then. Not a lot of difference. Where it dropped down here, right here is the 5.99. That was a beginning of February. But as you can see, things have been really volatile. We'd have these drops and gains, but overall, trending up. And as you can see, since October, that middle of October, we've had some nice gains back down. So we were definitely trending in the right direction. So, hopefully we continue this momentum we have going into 2024. All signs kind of trending that way, but, your crystal ball is as good as mine. If anybody needs anything at all, please don't hesitate to reach out. And I hope you guys all have a great New Year's Eve and be safe out there. Have a great day, everybody.